Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of London and New York cocoa markets plus New York cotton. I'll start with ICE Europe cocoa. The key feature here, as it is in the New York contract, is last week's weekly key reversal down. This was a vehement rejection of what I had termed last time as the market entering the old doldrums, starting from about 1680 and stretching down to the 1650 area, and then separately from about 1647 down to the flat neckline of the August to October 2020 move, currently at 1632. This move lower now impacts an idea I floated 3 weeks ago. This is to look at the whole of the July 2020 to date action as a possible giant sideways triangle, with the broken July 2020 to date uptrend, currently at 1666, as the lower trend line, and the September 2020 to date downtrend, currently 1825, as the upper trend line on top. Reappraising the pattern, I'm minded to instead look at the more recent November high at 1881 as a more likely candidate for the topside start of this downtrend, and trend line currently at 1786. Additionally, I have until this week been concerned that the breach below the lower trend line at the start of April and subsequent lack of a move lower plus consolidation may indicate a false break lower. This concern is now dispelled. Therefore, it seems appropriate to start labeling some potential downside targets for the sideways triangle. Initial potential downside target X would be in the 1545 area. This would be below some notable supports. The 2018 to date uptrend, currently at 1581, which we are currently testing. The lows from November and December 2018 at 1563 and 1561 respectively. They are the obstacles the market needs to overcome if it is to fulfill target X. There are two other features here, an old one and one more recent that I would like to discuss. Firstly, the older pattern. Back on the 21st of April, I pointed out a new pattern. The medium moving average, currently 1679, the short medium moving average, currently 1688, and the long moving average, currently 1697, went into a possible bow tie formation of the moving averages. I realized at the time they were going into it in the wrong order, but it was and is worth keeping an eye on, as it is now looking very much as if it is a bearish bow tie formation. Now, bow ties tend to cause a movement in their direction, in this case bearish, between 15 to 20 sessions after they cross over. In this case, if it is going to happen, it will be between the 12th and the 19th of May, something to put in your diaries. The second feature is to look at the action since March to date as a possible bear flag. It has merit, but it depends on where you take the measure of the first flagpole. If it is from the late March high, then it would be in the 1558 area. If it is from the height of March, then it would be in the 1460 area. And if it was from the early April high, well, then it has already happened. All these patterns depend on a lot. It's starting to make this market more interesting. ICE US cocoa. This contract, the same as the London one, benefited from a weekly key reversal down last week. It is also, as I've previously stated, appear to be a much clearer and easier daily chart here compared to the London contract. Additionally, we also have a much cleaner pattern here, which I highlighted last time. 5 weeks ago, the market broke down through the lower time, currently 2491, the early July to early November 2020 bullish shift pitchfork. On its own, this would be a rather large and important rolling support that proved its worth back in late February, and I was ready to retire this bullish shift pitchfork unless something dramatic happened to avert this idea. Well, something did. What may now be a larger and more serious action, a super diamond pattern, a huge one, stretching from roughly the end of April last year and into June this year. Hence, what we saw was a breakdown through the lower uptrend of this pattern. Well, this looked right away as if it might happen, but after 2 weeks of stagnation, prices started once again to look higher, and they tracked for the most part along the underside of this broken tine, and thus the underside of the lower super diamond pattern, the uptrend, until last week, that is, when the weekly key reversal down happened. We're now on the verge of a move down from this super diamond pattern, if the market has the will to carry it out. I'd previously placed a couple of targets below for the super diamond pattern, which I will finesse to just one, target X, potential initial target in the 2170 area. There are things in the way. The 50% Fibonacci line of the December 2017 to April 2018 move at 2377. The neckline of the August to October 2020 head and shoulders top, currently at 2248. The big 50% Fibonacci line of the 2001-2011 move at 2239. And the 2017 today uptrend, currently at 2185. However, if the will is there, then this whole super diamond could be overhead ammunition for a try lower. One final and near-term thing. This is also the same for London, but if we look at the whole March today action from its high, it's a potential bear flag. Then we could also have a potential target X1 in the 2240 area, and coincident with the 50% Fibonacci line. ICE US cotton number 2. The breakdown below the neckline, currently 88.47 of the January to March obtuse head and shoulders top 6 weeks ago, did not start a move lower. The anticipation of a bear flag, stroke halfway hesitation pattern, the bearish bump and run reversal top, well, they all proved false, and all the downside targets have been retired. What have we left? Well, what we have left is a market that, at the April 2020 today uptrend, currently at 81.48, turned back up towards the neckline, currently 88.47 of the April to March head and shoulders top, and the middle tine, currently 90.27 of the December 2020 to March 2021 bullish shift pitchfork, both eroding the rally, as did the congestion between 86.84 to 89.19 that dated from July to April 2018, and that is where we've ended up. We're still within the bullish shift pitchfork, and we're currently sitting on top of the vaguely flatlining short medium moving average, currently 86.32, with the medium moving average, currently 84.05, moving up higher into the action once again. I am tempted to draw a fresh February to April bearish Andrews pitchfork, but I will resist that temptation for now. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.